Hi guys, let's talk about Ondas Holdings, which is building the railway internet, or there is an existing railway system which is to be modernized. So Ondas is working on that, and it also has another segment which is the drone segment. So Ondas is also working in that. And let's watch a quick video on Ondas Holdings, which I created with the help of Notebook LM.
This massive industrial backbone really built for the 20th century. But right now, it's quietly going through one of the biggest technological upgrades of our time. We're talking about the birth of something called the railway internet.
And that, right there, is the massive question at the heart of this whole thing. How in the world do you take a system of steel and signals that's, 100 years old and drag it kicking and screaming into the digital age? The scale of this is just, it's immense. And the solution has to be just as big.
And I mean, the difference between the old way and the new way is it's night and day. On the left, you've got the old system. It's a total patchwork of old analog gear, signals you can't always count on, and just a tiny trickle of data. But on the right, that's the future. A single, powerful, high bandwidth railway internet. We're talking something strong enough to run fully automated operations. This is not just a little upgrade. It's a completely different way of thinking.
Now here's where it gets really interesting. This change, it isn't optional. It's not like the railroads are just deciding to modernize on their own time. No, the entire industry, through its main governing body, has mandated a single unified technology for everybody. This is a top-down revolution.
So, what is this magic technology they've mandated? Well, at its core, it's a wireless standard called IEEE 802.16. Don't worry about the name, everyone just calls it .16 for short. The Association of American Railroads, the AAR, they've picked this to be the technical backbone for the entire railway internet. And guess what? There's one company that basically has a monopoly on it, Ondas Networks.
So why this one? Why .16? Well, it perfectly solves the really weird, unique problems you only find on a railroad. First, it lets trains talk directly to each other, no cell tower needed. That is absolutely critical for split-second safety decisions. Second, it's super smart. It can hop between different radio frequencies to always find the cleanest signal. And third, and this is so cool, it's built to handle the Doppler effect, so it keeps a rock-solid connection even when a train is just flying down the tracks.
Of course, a mission this huge needs an almost unbelievable amount of money. I mean, you can't rebuild the digital guts of an entire continent on a shoestring budget, right? This called for a massive financial bazooka to basically remove the financial risk from the whole project right from the start.
And there's the number, $855 million. That's the strategic war chest that Ondas raised. And the goal here wasn't just to get by. It was to pre-fund the entire multi-year rollout, basically insulating the company from any market craziness while it gets this massive job done.
And this table, wow, it just shows how radical that financial transformation really was. Look at the cash. It goes from around 30 million to over 840 million.
Let's check the cash on how much they have as per the filings. Cash from operations. Yeah, cash from financing. So they have like $968 million. So cash from financing and okay. And let's look at their balance sheet as well. Yeah, their total assets have also increased a lot. And they also had a $362 million of income, but it was due to some kind of financial engineering, but not due to operations, which we will deep dive into later. But yeah, this company is financially strong right now. Let's continue watching the video. So it has significantly increased the cash from 840 million to 960 million.
And just as important, look at the debt, from almost 45 million down to zero. Gone. This move completely rewrote the company's financial DNA. It wiped out both the risk of running out of money and the drag of paying interest. Okay, so they've got the technology mandate locked down. They've secured a mountain of cash. So the next big question is, how do they actually make money? What's the plan to get from burning all this cash to actually generating it?
Well, here's the roadmap they've laid out. 2026 is what they're calling the breakout year for revenue, hitting over $100 million. But notice this, they don't actually break even on a cash flow basis until 2028. And real serious profitability, that's projected for 2030. This is definitely a long-term play.
Let's just look at that growth on the top line. The projections here show revenue more than tripling between 2026 and 2030. What you're seeing is that classic S-curve of adoption, where you have slow growth at first, and then, boom, a massive acceleration as the technology just becomes standard across the whole industry.
But remember, revenue isn't the same thing as cash in the bank. This
So yeah, this is the free cash flow. So after the company makes some money, and that's like revenue, the total revenue, and it burns some money in getting that revenue. So whatever is left is the free cash flow. So if we see the present value of free cash flow is gonna be $12 million, then 36, 58, and they're gonna increase their cash flow significantly after 2030s. And the present value of the cash flow right now is more valuable than cash flow in the future. So that's why after allowing a discount rate at 12%, we get the cash as free cash flow as 11, 28, 41, 60, and yeah, so we will arrive at a fair value of around $20 to $21 per share, depending on this.
chart shows what's known as the J-curve. It basically means you have to spend a ton of money up front, that's the dip in the J, to build everything out before you can start raking in the cash. You can see that big cash burn in 2026, but then it swings way up into the positive as the network really comes online.
So how do they get to that positive cash flow? It all comes down to a really crucial shift in the business model. See, the first wave of money comes from selling hardware, the actual radios and towers. But the real prize, the long-term high-margin profit, comes from recurring revenue, things like software licenses and maintenance fees. This is the big move from being a hardware company to becoming more like a software utility. And believe it or not, the company's vision is actually even bigger than just the railroad. They see the railway internet as the foundation for something much, much larger, what they call a system of systems. So it's not just about connecting trains. It's about all the other critical infrastructure that runs right alongside the tracks.
This breaks down their grand plan perfectly. So step 1, you build that core railway network. But then step 2, you start adding layers on top of it. Think about it. All those thousands of radio towers you built for the trains, they can also host things like autonomous security drones and sensors for utility companies and oil pipelines. And that leads to step 3, the end game, a single unified network for both data and security, covering America's most critical industrial assets.
Okay, now let's be real. No project on this kind of scale comes without risks. So for this to be a credible look at the situation, we have to talk about the potential roadblocks that could really slow this whole journey down.
And the number one risk, honestly, can be summed up in just 2 words: railroad time. This industry is famous, or maybe infamous, for its slow, deliberate pace. Even with a mandate, getting these massive railroads to spend money and make decisions can be like watching glaciers move. A delay in adoption by the big guys is the single biggest threat to that financial timeline we just looked at.
And that brings us right back to the beginning, doesn't it? This quote from the source material just ties a perfect bow on the whole story. The biggest risk is railroad time, but the ultimate defense against that risk is that massive war chest of cash. That $855 million isn't just for building things, it's a hedge.
It gives the company the stamina to simply outlast any delays, to endure the friction and see this revolution through to the very end. The question really isn't if this is going to happen, but just how long it will take to get there.
Okay, let's watch some other video about their drones as well. Um, since we only focused on one segment, which was their network segment, and right now they are also they might get an order from the government for drones, and they also have several backlogs. They have a backlog for certain drones as well. So let's see.
A revenues leap from around 48 million to 180 million in a single year. That's a mind-boggling 350% jump. What's your first reaction? Is this the investment of a lifetime?
Yeah, this is the Optimus drone which I found in a video. Let's see if this gets loaded. It's taking a lot of time to buffer. So this is their Centric counter to AIS weapons. So this is their scout robot, which can kill the enemies. It's basically like a dog with a gun. So okay, looks like I'll have to upgrade my internet connection. Well, we can meanwhile focus on a bit of financials. Their debt is really low, like $4.37 million as compared to their massive cash pile. So their enterprise value is around 3.18 billion, which indicates that the market is valuing the operating core of the business at a premium, though this multiple is compressing as the company executes on its guided 2026 revenue of $390 million. Ondas is currently in a massive net cash position of approximately $1.48 billion. Okay, market cap 4.66 billion, 4.37 is the debt, 4.37 million. So it's the debt is insignificant. They have $1.4 billion of cash and $3.18 billion of enterprise value. So they really have some fancy equipment, but they also need to execute on their contracts and the backlog. So Ondas Autonomous Systems OAS has it's the primary engine of revenue growth, which is their drone business, which is the unmanned aerial system UAS, which is a fully automated drone in the box platform, which is led by Airbotics, which is globally deployed FAA certified Optimus system for persistent remote data capture, and American Robotics, the first company to receive FAA LOS approval, counter UAS. It provides integrated detection and neutralization layers. This includes Sentry's, which is a passive, non-destructive cyber over RF detection and takeover system for the 2026 FIFA World Cup, and Iron Drone radar autonomous net-based physical interceptors that capture hostile drones in flight without collateral risk. Okay, so tactical robotics and demining, led by Roboteam and 4 million defense robotics landmine detection, demining, and post-conflict cleanup solutions. Okay, so yeah, this is an important thing, especially like the Strait of Hormuz is blocked and there are like mines over there, so maybe this arm of Ondas can help clean up those mines. Stratospheric intelligence handled by Worldview Enterprises. Handled by okay. Stratotiles that operate in stratosphere to bridge the gap between satellites and low altitude aircraft. AI battlefield led by Omnisys, which powers AI powered battle resource optimization. Bro software that serves as the core orchestration layer. That's a pretty funny name, bro. Serves as an orchestration layer to coordinate sensor, drones, and ground assets in real time. Okay. And this is their and second arm Ondas networks, which we watched about an entire video, which is the .16 standardization of the old railway system on the East Coast. So they are working with Siemens in this and Ondas Capital, which combines advisory services and strategic investment management to accelerate rapid scaling and global deployment of unmanned and autonomous systems to allied defense and security markets. Okay. They reported a revenue of 50 million, representing 1,000% year-over-year increase in their Q1 revenue. So yeah, this company is in growth mode right now. Gross profit is 24 million and gross margins expanded to 49% for revenue 4.25, 30, and they are targeting 390 million of revenue. While the company reported a massive GAAP net income of $361 million, this bottom line profit was driven entirely by two non-operating, non-cash accounting gains: warrant liability fair value remeasurement. So they issued some equity offerings, acquired classifying issued warrants as liabilities, and as the stock price fluctuated, the mark-to-market uh, fair value of these liabilities declined, forcing the company to book a massive non-operating paper gain. Okay, gain on deconsolidation, 51 million. Okay. In the core operational level, the business reported a operating loss of 42 million and adjusted EBITDA of 10 million. This reflects an elevated integration expenses, higher research development outlays. Okay. Moat analysis, barriers to entry. So it has built several moats. The with the American Association of Railroads, the AAR, Association of American Railroads, okay, selected IEEE 802.16.16 protocol as the new communication standard. So Ondas Networks Fullmax platform is leading the software-defined radio. Okay. In the UAS segment, the FAA Beyond Visual Line of Sight BVLOS approval by American Robotics Blue UAS status earned by Optimus Drone to prevent commoditized competition. Blue UAS status certifies compliance with strict defense and cybersecurity and supply chain standards. Okay. The combat proven integration mode. Ondas has moved from a hardware vendor to vertically vertically integrated system of systems defense platform by combining Centrus passive cyber over RF detection, Iron Dome's kinetic net-based interception, and Omnisys AI-driven battlefield orchestration software. Ondas offers an end-to-end defeat counter UAS loop. This deep technology stack creates high switching costs and extreme customer lock-in. Okay, so Ondas has deployed over $1 billion across strategic M&A to assemble multi-domain defense platform. So Ondas has Centris, it got Centris, it has Mistral, Worldview, Omnisys, Roboteam, and 4M Defense. So Omnisys was closed on May 21st, 2026. Mistral Inc. closed on April 24, 2026, which was a 175 million all-stock deal. Okay. Palantir Warp Speed. Okay, so they have also partnered with Palantir EIP and Palantir Warp Speed and unifies data across supply chain, engineering, and manufacturing workflows. This replaces fragmented tracking, allowing Worldview and Ondas to scale aerospace production. Sky uses AI processing at the edge directly on the vehicle. New defense contracts. So the company raised 2026 revenue target of at least 390 million and has its backlog has surged to 457 million. Okay. It also has the vast FPV, which is a cheap drone, which is like a counter to the Shaheed drones. These kind of drones are needed, which are cheap, and they got a 20,000 units per month order for it. And Ondas represents a high conviction asymmetric investment opportunity in the defense technology and industrial wireless sectors by leveraging its $1.48 billion cash pile. Okay, the strategic integration of Omnisys. Okay, yeah, so it's currently trading around $12. So, mm, okay, guys, so we will look into Ondas more later. And yeah, I also have a pretty substantial position in this, and it is almost about to break its lifetime highs, which it created around here, like $15.28. So let's see. And it also has a lot of short interest, so around 31% short float. So yeah, there might be a short squeeze to the upside as well, though it might not be as sustained like the GameStop's short squeeze, but hmm, it can happen. And this is another big catalyst. Trump's drone bet has retail piling. Uh, so like the government is planning to invest a lot in drone stocks. So yeah, okay, so that's it for me. And or wait, let's look into this as well. Ondas Holdings, the financial architecture of a 24-month transformation. 24 months ago, it was a cash-constrained technology developer, and today it is a heavy capitalized strategic aggregator. Earlier it was pre-revenue, now it has two narrow product lines, and that's why the market has re-rated it on DAS. Yeah, this is the main risk along with these companies, which is the dilution risk. So, um, that's the thing. Like, if you buy this company, your shares might be diluted. So, if I have to explain dilution to someone, consider a pizza slice right now. If you slice the pizza into four equal pieces, and if the um company dilutes, then you get lesser of the company. So you'll get uh, one fifth or one sixth of that pizza slice instead of one fourth. So that is cool. Yeah, that's all for me. Bye, guys. Have a good one.